Yeah, I think it's the right approach for investors. It's very difficult to react to everything that happens exogenous to the markets, you know, and you've been talking at length there about the Saudi Arabian situation, which will continue to evolve over the short. So reacting to everything that happens short term in the markets is very difficult. So you go back to fundamentals, and it's clear that the US economy is unequivocally strong, as evidenced by the earnings data that's coming out, by the strong industrial production figures that have been released, by the low inflation, and by the Fed looking to continue to raise rates to keep the throttle on the US economy.
Yeah, Toby, when you talk about the situation around Saudi Arabia, though, we simply can't ignore it. And as we've been discussing, it is a changing story by the hour, really. But how is this playing into your investment outlook, if at all?
Well, it's one of those difficult ones to define for investors. It just means a risk-off approach, which means you become a little bit more defensive in terms of your asset allocation. You might go back into treasuries, and we've seen treasuries sort of sit around that 3.15% after a big move up towards 3.25%. You might buy yen. We've also noticed that gold has moved back up. It hasn't really surged, but gold's sort of from the 1180s up down to 1220, even though the US dollar stayed pretty firm. So there's a couple of defensive asset plays that people will look at where they're not certain about an outcome of an event. And this is one of those ones where you really don't know what's going to happen, but it sort of puts you on a little bit of the defensive.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.